RK Swamy joining in. Weekish debut on the exchanges, listing at around 250 rupees compared to the issue price of 288 rupees per share. But to talk about the company's post-listing plans, we have with us Shekar Swamy, who's the group's CEO and whole-time director at RK Swamy, joining in. Thanks a lot, Mr. Shekar, for joining in. I remember our conversation last week in our studio. Congratulations on the listing. It was a tepid listing, but from there on, we've seen a recovery from the lows on the stock itself. So let's talk a lot more about the numbers of the company, the way forward you are expecting growth to continue. Well, on joining us here, you said that nearly 60% of the revenues of the company come in the second half of this year. So let's get the numbers out of the way. This year is 350 crore on the top line on the cards. And are you likely to, what's your likely growth for the next year, FY25 that is?
So we have a number of initiatives, as we have spoken when we were in the last meeting as well. We have just launched the RK Swamy Center for Indian markets. Typically, the month of March is always a high for us, which is when all the budgets get exhausted. So we are looking forward to a good year-end this month. And we have other initiatives in the next quarter as well. We will be looking at growing the pie in terms of the new initiatives that are already in place. So there is a buoyancy in the market as a result of the elections as well. So that's going to kick in next quarter. The entire sector in terms of the media marketplace is going to enjoy that fillip as a result of those activities. And we expect to participate a little bit in that sequence as well. So we have some pipelines that are fructifying. And overall, we are looking forward to getting started in the new year in a good way.
Mr. Swamy, good morning. Nigel on this side, and congratulations on the listing. The last time I told you that, sir, this time around we have got the demo of the business. But when you join us on listing, we'll try to pull out some numbers for you. So let's get going to that itself. Revenue this year, as Mangalam asked, 350 crores. Is it on target? And also you told us second half of the year, the margins are better. Last year, you did high teens margins. This year, what should the average run rate we should be looking at for the year?
No, it would... Yeah, so it would be the second half is in line with what we have tracked, not just for the past, but also for the current year. The 60-40 ratio, 60 kicking in the second half and 40 in the first half is very much online. And so, yeah, we would be delivering to those ratios as we have already discussed.
So that is 350 crores,
where the fixed cost... close to that, yes. I don't have the precise numbers to share with you, but somewhere in that ballpark.
And you were going to get to the margins as well. Please go ahead.
Yeah, so as you said, the first half is, in our business, as explained to you previously, the ratios in terms of fixed costs remain the same. So if your revenue kicks up from 40 to 60% in the second half, and more towards actually the Q4 numbers will always be the strongest for us. So the margins will be in line with those expectations. So we are in line. We are on target for that.
We can expect high teens by
last year we delivered. Yeah, so last year we delivered an EBITDA of 21%. I think we should be in line with that. So the high teens in terms of whatever the flow through will have. Yeah.
Got it. 20-21% EBITDA with close to 350 crores in terms of top line. But from a growth standpoint, the last 3 years your revenue has compounded at about 30%. But this is minus the initiatives that you will be taking after listing. So with all those initiatives, can we see a scale up in the growth at which your revenue picks up going forward? Or is it still going to be this 30-35% mark itself?
So the initiatives that are on the cards are of a let's say they're not short term. They won't kick in like within a quarter or two, but they will kick in over a period of time. Typically in our game, for us to scale, for example, the consulting group or even the research piece or the data set, there are a couple of initiatives which actually will take longer than that. So the growth will kick in through new business, existing business, geographic expansion, which are already in the cards. So these are the things that will kick in the growth. The new initiatives will kick in slightly longer phase of time. So it's not an instant. You can't open a tap and things don't work like that in our business. So
no, we
that's
completely
how
understand
the initiatives are in place.
So let's talk about your revenue mix itself then. Say, you compound at around 30% for the next couple of years, and thereafter you have these initiatives kicking in, contributing to your revenue. So say from a 3 to 4 year standpoint, what is the revenue that we're looking at, and how much of it comes in from your new initiatives? If you could break up your revenue vertical by vertical.
So 50% of our business is in the integrated marketing communication space. That I don't think will change. 27% is from the data analytics and MarTech business, and 23% is from the market research business. We are riding all three horses as strongly as we can. We don't expect dramatic shifts in this mix. This mix actually works well because in the communications business, in the creative space particularly, the margins are better. The data analytics and MarTech space, the growth rate is better. And in the research space, it's a very, very strong and steady pipeline. So you do a mix of this, you will get the growth rates that we are looking for. It's not going to, and the other piece, of course, we keep talking about is digital content. So that's in the first piece, which is the marketing communications piece. So there are 3 or 4 projects in the pipeline. These are all discussions. One cannot speculate on that. But any of them kicking in will enable us, those are the scale projects which help us to deliver the spikes in our journey. And that, I think, is very much the way we look at it. And we are all the time looking for opportunities in that space.
Right, Mr. Swamy, it's been good speaking to you. Thanks so much for joining in. We can feel the passion that you have for the business, but post-listing now, we'll have to talk a lot of numbers in the interviews to come as well. So appreciate you joining in.